Okay, so I want to make a quick video talking about taxes on your stock market and crypto gains. Honestly, it's not very complicated, it's very simple. I think a lot of people get scared of taxes, but this is nothing to worry about. And before I give you guys a little more information, you just have to know that I am not an accountant or a CPA, and so all the information I'm giving you in this basically is just personal advice from me. Not really something you can take legally though, but it's just basically some tips that I've learned. Okay, so the first thing I want to let you know, which is actually really nice, is you do not have to pay any taxes until you sell your stocks and your crypto. So if you were to hold your stocks for the next 2 years without selling anything, you do not have to pay any taxes. But once you sell your stocks or your crypto, that is when you have to start paying taxes on your gains. Okay, so there's two types of taxes you're going to actually pay with stocks and crypto, and that is short-term capital gains tax and long-term capital gains tax. So I'm going to go over both of those with you guys so you can kind of know how to deal with it. Okay, so the first type of tax I want to talk about is short-term capital gain tax. So you only have to pay this tax when you basically buy a stock and then you hold it for less than 1 full year and then you decide to sell it in less than a year. So for example, let's say you buy a stock tomorrow and then in 2 months you decide to sell it. Well, the money you made on that stock would end up having short-term capital gains tax since you ended up selling it in less than a year. Now the next tax you have to know about is long-term capital gain tax. So you only have to pay this tax when you held the stock for longer than 1 year and then you sell it after 1 year and basically take those profits. So for example, let's say you buy a stock today and then you end up selling it in 15 months. That means you held it for longer than a year, and so that means you're going to pay long-term capital gains tax. And so obviously for these two types of taxes, you only have to end up paying one of them depending on the situation. So if you hold the stock for less than 1 year and you decide to sell it, you're going to have to pay short-term capital gains tax. And if you hold the stock for longer than 1 year and then you decide to sell it, you're going to have to pay long-term capital gains tax. So that's basically it when it comes to this. It's pretty simple. Now the next thing I want to talk about is the percent of taxes you pay on these two taxes. So you must know that with long-term capital gains tax and short-term capital gains tax, you are taxed a different amount. So for long-term capital gains tax, you usually have to pay anywhere from 10% to 20%, and for short-term capital gains tax, you usually have to pay anywhere from 35% to 50% of whatever profit you make. Now, as you can see, there's a big difference between both of them. You pay a lot less tax with long-term than you do with short-term, and that's just the way it is with the government. Unfortunately, they charge you a lot more when you sell your stocks in less than a year, and when you hold them for longer than a year and sell them later, you pay less tax. And as you can see here with short-term capital gains tax, 35% to 50% of your profit is taken away just from taxes. And so that's a lot of money that you have to pay in taxes. So for example, let's say you made $1,000 profit from a stock that you sold. Well, that $1,000 profit is not all going to be yours, but if you were to hold it for longer than a year, you only have to pay around 10 to 20% tax. So because of these taxes that you have to pay, a lot of people prefer to hold their stocks for a longer period of time, and I also like to hold it longer as well. It just makes more sense to hold the stock for a longer period of time, and the reason for this is not just the taxes, but usually a lot more happens in a year to the stock, and so if you believe in the stock long term, you might as well hold it long term because you'll end up making a lot more money anyways. So in my opinion, I recommend you hold long term and for longer than a year if you want to avoid taxes. But I know a lot of people like to buy and sell in a short period of time, and that's understandable too. Now you also have to take these percentages very lightly because it really just depends on where you live, because I live somewhere in Canada, right? And so we have to pay a lot on taxes. But if you live somewhere else like maybe the US or Europe, it's going to be a little bit different, but it will be very close to this. Now the next thing I want to talk about is how do you actually pay these taxes, or you're probably wondering how do you keep track of these taxes. So thankfully you don't have to keep track of anything. So the account that you're using to buy stocks, they keep track of everything. So whenever you buy and sell, they keep note of that, they track it down for you, and so when tax season comes around, they will send you a letter in the mail to your house, and so in that letter you're going to see how much you owe in taxes, and so that's basically how you're going to pay the taxes. And obviously I believe they're going to have instructions on how to pay the taxes, but it's just like any other income you make. So if you work a job or anything like that, you have to pay taxes the same way on your stocks or your crypto. So honestly, don't worry too much about taxes. It's really simple, and at the end of the day, as long as you are making money, it doesn't really matter if you have to pay taxes. So honestly, having to pay taxes is a good problem to have because that means that you're making money.